sir.
The MoneroTopia Price Report segment is sponsored by Exolix, a privacy-focused, non-custodial instant crypto exchange. Go to exolix.com to enjoy secure and completely anonymous swaps with no KYC or sign-up. Swap between Monero and 2,000 plus assets at the most competitive rates and with no limits. Exolix.com, your fast and secure way to privacy.
All right, so we're looking here at the Monero chart. We've had some price troubles. In fact, everybody this week had some price troubles. So yeah, we'll get around to all that. But yeah, we're trying to hold the line on the stablecoin level here, the 150 level, which I'm not enjoying that too much, particularly because I was actually hoping to enjoy some time here at the upper standard deviations at the 170 level. But what are you going to do? That's just sort of how the market's unfolded. I didn't like how Monero pulled back with the rest of the market. I thought that was I thought it was a little bit of bullshit. But yeah, what are you going to do? Like we have this kind of stable price level, and when you have moving averages that are this long and a price that has maintained this kind of stability for this kind of time period, like if we go to the weekly here, you'll see it. Let's not go to the weekly. Let's go to the 2-day chart so that we can see the lines a lot better. Yeah, when you see here that we've been at this level on average, the moving average here is sitting at 150 for like 2 years now. 2 years going on 3 years maybe. Yeah, I mean you're gonna be naturally attracted back to that moving average. In fact, that's really the way that you should think about moving averages in a primary sense. It is a natural magnet for price to return to. So right now we're in order for us to break out, we kind of have to contend with that. So I guess, at some point this thing, Monero is going to break towards the upside. One of these days, one of these years at MoneroTopia, one of us is going to be close, whether me, Tux, or Doug, where one of us is going to get close to the price. But we need a pretty good pump here in the next 12 days. I'm starting to wonder if that pump is not going to be forthcoming. And maybe we just need to move these lines somewhere down here. That could be a legitimate possibility, guys, and we'll talk about why that is. But effectively, it looks like we might be at the beginning of this crash sequence thingy. It might be incipient. It might be ever so slightly early to call that, but the very earliest inklings of the beginnings of what might be a real crash showed up this week. So we'll take a look at that in a little bit later. There we go. Okay. Okay, and then the Monero versus Bitcoin price. I guess I was like totally wrong on this chart. I said I felt like it wanted to go to the upside. I was wrong. It wanted to go to the downside. And now there's no two ways about it. It unfortunately does look like this chart is going to want to play with that lower standard deviation level. It's not an unsurprising thing from the perspective of wave magic, just the TA analysis, the standard deviation clusters analysis, which I colloquially call wave magic. Actually, gonna credit Juan Galt with that one. He was on your show, I think 2 days ago, or maybe it was yesterday. Yeah, gonna credit Juan Galt. He actually took a look at this and he's like, bro, he's like, this is wavy magicness. It's wave magic. So he actually gets credit for naming these charts. Anyways, because yeah, that sounds a lot cooler than Bollinger Bands. And being a bro myself, I feel like you've got to name things in a cool fashion, make them catchy. Anyways, it feels like the Monero versus Bitcoin chart wants to explore the lower standard deviation areas, which I think is unfortunate. But that's typically how wave magic charts behave. That's typically how the clusters of standard deviations behave. Once you get a big breakdown from major levels, like we saw here, right? These lower standard deviation levels. Once you break that down and then you form a new interim bottom, before you can go up, you usually want to challenge some major areas like happened here, right? This is the like very, very, very long-term lower standard deviations. But you typically end up challenging somewhere in the lower standard deviations that got broken down. And then you have to make a return trip and establish the lower area down there. Classic wave magic action. So unfortunately, I don't see necessarily any positive movement in the near term for the Monero versus Bitcoin ratio. But let's also put it on the record that my ability to call Monero's price movements is not nearly as proven or good as my ability to call macro kind of stuff, macro movements. So I think I have, though, I mean, one, there is like a level of fuckery that Monero especially gets attention from the deep state and from, the cabal. But two, I kind of have my own like emotional hangups about it, which is why I try not to trade Monero at all. And I try and just like use it and, like I say, I spend it and then I retop my bags up, and then I spend it and then I retop my bags up. So, yep, maybe I need to earn it, right? Maybe I need to sell something. Maybe I need to sell Wave Magic for Monero. Wow, look at the price divergences. Poloniex has decided to go down -2% from the rest of the exchange complex, at least from Kraken at a minimum. So I don't know what Justin Sun is up to, but maybe he needs to get his shit together and stop fucking with Monero's price on his exchange. Not that anyone's actually trading any real Monero. It's all wash trading, probably. Like, I just, maybe not. Like, maybe he got some of his friends and they're trading Monero on that exchange, whatever. And, he doesn't mess with his friends. Who knows? Whatever. Not going to speculate too far on that. Let's take a look at the Monero market cap dominance as a whole. This chart is looking ever so slightly better than the Bitcoin versus Monero chart, but it's not necessarily looking that much better, right? So, what we haven't looked at in a while? Let's do crypto. Got a new keyboard, so if I can't type, that will be my excuse. Oh, you know what? Maybe we need to do market cap. Man, maybe I shouldn't have done this here. No, I don't know what the Monero market cap symbol would be. Let's try crypto XMR. Yeah, that's just Monero price. I know that there's, we're not going to do it. We could do a simple one.
If you're looking for a Monero chart, there's one on BitInfo charts that has the Monero market cap over time.
I want to divide the Monero market cap by total. Here's what we can do. We can divide by, I want to divide it by total 3, which is like minus Bitcoin, minus Ethereum. So it basically compares Monero to the rest of, to all the other shit coins out there. I used to look at them. I used to pull the market cap chart all the time, and I forgot what well, that's fine. Let's just do times like a billion or something. Invalid symbol. Oh, probably that's why. There we go. Yeah, because I want to look at how Monero is doing when you subtract Bitcoin and Ethereum from the equation, right? Because that gives you a more interesting view. Actually, wow, I like how clean this chart is. I haven't looked at this in a while, so this, you're getting some real time thoughts here. Wow, this is a much cleaner chart. Let's go to the 2 days so we can get some more history here. Yeah, so we were writing those upper standard deviation bands, and then okay, there was a delisting that happened. Okay, so I guess so right there. I mean, it is very, you wouldn't normally expect to go to like the upside and then immediately start pumping. Typically, you would go to the downside, explore this area, waffle a bit, and then go to the upside. But yeah, I mean, this was all the delisting stuff, right? So apart from that delisting, which they, again, we know exactly what that was all about. But what's interesting about this chart is that after this bullshit happened, we've got Monero riding back in the lower standard deviation bands again, which is interesting because normally on what you would see on a Wave Magic chart like this is you would break down, you would touch the underside of the standard deviations, and then you would continue going down. But instead, Monero basically recovered. So this is Monero's action, how it performed relative to the rest of the cryptocurrency ecosystem, except for Bitcoin and Ethereum, right? Because Bitcoin and Ethereum kind of have this like established thing, and obviously Bitcoin is now supported by the deep state, and it's integrated into the banker pockets and Mr. Fink, as Ray elucidated for us earlier. So yeah, it is interesting sometimes to subtract Bitcoin and Ethereum from the equation because again, Ethereum is, it's captured in a similar fashion as Bitcoin, right? It would be impossible to think that it wasn't captured like Bitcoin was also captured, given how corporate they are and all that stuff and all the associations. Anyways, so it's interesting to subtract the two, mommy and daddy from the equation in terms of market cap and see how you're performing relative to the rest of the altcoins. So we're actually doing pretty good. Maybe I wouldn't say too good, but things could be worse, right? Things seem relatively stable, especially given the attacks here. So that's an interesting chart. You know what? We're going to leave that. We're going to click save. I think that's a more interesting chart than the XMR.D chart, and we'll take a look at that every week from now on instead of XMR.D. Okay, Monero versus gold. We haven't talked about this in a while, but there's nothing to talk about. I think the last time we left off on this analysis, we just said, hey, these two lower standard deviations are converging, right? It would make a lot of sense to expect to just continue in that area there. So that's probably what we're going to see for Monero versus gold. Right after, so we're looking at all the rest of the privacy coins here. Right after we got off the horn on Saturday last week, I guess it was maybe Sunday, but Xano pumped, right? Xano made some good moves to the upside, put some new all-time highs on. Right, that's a nice 20% up, currently consolidating. This is actually quite good that Xano actually made these kinds of moves in the face of the rest of the market crashing, right? Like the S&P was down like, I think 3% over the week, and Bitcoin was down. So yeah, that was interesting that Xano managed to put on gains while everything else was basically crashing. Nothing to see here with Firo. There was like this kind of false breakout, from the chart line pattern, right? These are tea leaves, right? When we draw lines on charts, these are tea leaves. That's why I really do rely on the wave magic, the standard deviation analysis. It's inherently statistical, and it is an inherent generalization of the concept of moving standard deviations. You hear them called Bollinger Bands, but again, which moving standard deviation do you want to choose? It's like, which moving average is the magical moving average? Let's choose the 50-day, because 50 is a round number, or the 100-day, or the 21-day, because that's exactly 3 weeks, or the 30-day, because it's a month. It's like, please, like everyone's got their own one that they choose. You know what? Let's overlay them all, and let's see where they cluster together, and that is going to give you a much better picture of where the market is at. Okay, anyways. Enough shilling my own creation. Firo is in this like sideways triangle, and it's also interestingly, you can see the standard deviations here are all falling, and you'll notice that that zone, right, this standard deviation zone is where it got stopped out and then got pushed back down into this zone here. So yeah, again, Firo is going to crash with the rest of the market if the market does indeed crash. So just expect that. Xano's strength here is interesting. I wonder if Xano, I mean, it's just one tiny little data point. It pumps, a little bit while everything else dumps. That's not enough to say that it's a counter, that it'll protect you during the crash, but that is interesting. Maybe it will. Who knows? Let's see. Is there anything else interesting going on? I guess it's interesting that Darrow continues to just be sluggish here at the bottom. The fact that, I mean, it's hard to think that there's too much more selling that's going to happen of Darrow now at this point. Like the selling people wanted to do is probably mostly sold. Yeah, there's the potential this thing could make it down here a little bit, but I mean, then again, like why on earth would, like, what purpose could Darrow, like, what is their use case now? What is their claim to use case? Before they were hacked, they could be like, oh yeah, we've got private smart contracts and we're the best privacy ever. But now, like, no one believes. So it's like, what's the use case? What's their, like, every coin needs a reason for you to buy it. If it's a meme coin, it's like, well, this is a fire meme, right? Buy the meme. It's going to pump because everyone loves fire memes. If it's got a dog on it, right? Okay, that's, the dog is, everybody loves dogs, right? If it's got a cat associated with it. If you've got a corporation and lots of stake being purchased by the CEO, like Zcash with his Waigu stake, maybe that's your reason for buying it, right? We can be compliant on the exchanges. Look, we're a quote unquote privacy coin, not getting delisted. And okay, yeah, they've got some good privacy features. I know I'm being a little bit of an ass there, but what's the use case on Darrow? Like, where are you going to be like, yeah, let's all buy Darrow because question mark profit? I just don't see it. All right, enough shitting on Darrow. Pirate doing nothing, just oscillating because they have no volume. All right, let's talk about stuff that matters. The only chart that I even care to even talk about here is honestly Xano on the privacy coins. Okay, whatever. Let's talk about Bitcoin. Let's talk about some of the crashiness that happened this week. It actually happened a little bit after some pumpiness. So we got off the horn on Saturday here, and we got a decent pump there out of Bitcoin to the tune of 10%. And then it came back down, right? So technically it's up overall. But midweek, the S&P started pulling back and crashing, and so did Bitcoin. If you remember last week, I said, yeah, the technical analysis on Bitcoin here is good. I'm not sure if it's enough to prompt me to want to get bullish on Bitcoin. Although, in some cases, it's hard to argue with technical analysis in some cases. So like I said, we're occupying this zone. That was a good sign to think that you could pump further. And then things hit the previous all-time high and then pulled back, right? Things got up here and then came to the downside. If this thing next week starts flirting in this area and you start to see Bitcoin making lower lows, that's really not a good sign, right? That's like a sign that bags were being unloaded. That's a sign that liquidity was being unloaded onto people that were getting bullish onto the swing traders, right? Because there, everyone's got in their mind, hey, I've got my hodl, but I could play a little bit on the leverage side, just a little bit, 1%, 2%, nothing big. I'm going to go play on the leverage side and maybe I can really make that work for me, especially we're about to be in a bull market. So I want to go buy some leveraged up coins. And then look, we're about to break out, right? The TA is clear on this. We're about to break out to the moon, bro. So let me take 5x leverage and turn that 2% of my net worth into 20% of my net worth as Bitcoin heads to 100K and 200K, right? There's definitely a lot of people, a lot of traders. There's a lot of swing traders out there. And these kind of chart patterns are often designed to fucking wreck you. They are designed to get you bullish only to stop you out by coming back to some level here. Don't get me wrong. Even from the wave magic perspective, this chart in a long-term sense is bullish, right? You still have these upsloping long-term upper moving standard deviations, the blue lines, right? All of that is upsloping. And we also have the situation going on here at the top, right, where we have the near-term standard deviation bands are starting to upslope. I don't know if you can see that. Let's really zoom in on it so you can see it, because this is, again, some more classic wave magic action. You can see here that these lines right here, so the standard deviations that were formed out of the more local action when things pumped this summer, you can see that these lines are already starting to curl up. That is very good wave magic action. That is the kind of thing that you want to see. That could convince me to move to make just a TA play. Forget the fundamentals. That is the kind of thing that could convince me to make a TA play into Bitcoin here for the short term, especially because we know that Bitcoin needs to beat its all-time highs, needs to close monthly candles higher, and prove it's in a new bull market before you're going to see the rest of the altcoins follow. So, I really do want to see this thing obviously we all want to get some gains, but again, I am still counterbalancing that with this possibility that this really, I should say, near certainty that a big crash is coming. It's just a matter of when, not if, right? So is it going to happen in the next few weeks? Is it going to take a few more months, right? That's the game you're playing when you're trading. But anyways, yeah, if you see Bitcoin, get really suspicious, guys. If you see Bitcoin occupying this zone and then trending towards the downside, that especially if that's combined with some of these macro signals that that we really don't want to see. We'll talk about those macro signals actually right now. Let's just take a look at the shitcoins really quick, see if anything interesting happened. Nothing interesting did happen. Dog's still doing pretty good, actually. It looks like Dog maybe, Dog made another little pump here. All right. Cool for Mr. Dogcoin, Mr. Doge. Okay. So, Bitcoin dominance broke above like we talked last week. Oh, wow, shit. Okay, that's actually a new break. So we kind of extended this line and we said, hey, this line right there is invalidated. But last week we just kind of tapped it and now it's actually broken above. So yeah, I think at this point we can effectively expect Bitcoin dominance really does need to make some kind of blow off here before the rest of the crypto market, the rest of the altcoins are going to follow. Like ETH BTC, for example, down here, we've talked about this. I missed this call entirely, 100% wrong on this. This chart is going for these lower standard deviations now, right? Like that's a great spot to pick up Ethereum. Right here is a great spot to try and pick up some Ethereum, flip your Bitcoin into Ethereum. I don't know why you would necessarily be playing in those markets, but again, we're talking about price, we're talking about trading, right? So just trying to give you some ideas there. But yeah, Ethereum is headed for that lower area. It looks bad for the ratio there on that coin. Okay, so let's go to the macro and let's see what we're talking about. We'll start with the stock market, and we'll show you guys that the stock market gapped down on Thursday to the tune of 3.5% on the Nasdaq, and on the S&P, it gapped down to the tune of 2%. Wait, nope. Let me redo that. Yeah, I mean 2%, 2.5%. That's not unheard of. I mean, we've seen plenty of that. There's 1.5%. Here's one where we fell 10% in a couple days, or really 7% in a couple days here back in August. So I mean, this is not you wouldn't look at this drop and say, "Oh my God, the crash is starting," right? But but that's how crashes start, right? Crashes start with little moves down, and then those little moves accelerate. So yeah, everything kind of did pull back. Gold, however, did hold its own, right? Gold didn't pull back hardly at all. Just continued moving towards the upside. I guess we had a little bit of negativity this week, right? So a little bit of a pump, a little bit of a dump, overall flat since last Saturday. Again, I think that gold is most likely heading to this very top level, right? That those standard deviations there. These guys right there. Oh, whoops. I guess sometimes when you change time frames, it reveals more of the of where the wave magic lines are. Anyways, but yeah, I anticipate again, gold is wanting to move and is going to trek along this like prime standard deviation line here. Gold held its own. We see the reverse repos. We talked about this chart last week. We said, yeah, this bullhorn pattern was kind of like them. To me, it sure felt like, oh yeah, we're not pulling from the reverse repos. We're still at the same levels we were here. It was a way to obfuscate what was really happening, which was they're pulling from reverse repos to keep stock markets levitated for a period of time, really until the elections, right? So at this current rate, right? I mean, the way things are falling here, I mean, it even just broke down like kind of this. I mean, I kind of drew this line in a sort of bullshit way, but it was sort of like the average. I drew it in a way that was like, okay, what's the average decline since the beginning of the year, since 2024, right? Like, what's the average trend line? It wasn't like a support line or anything. But anyways, yeah. So you can even see that like this chart, the reverse repos is now broken down even below the average that had been established for the entire year, which means that again, like. I'm wondering like how much more liquidity is here and how much can this support the stock market? There's 155 billion left. And keep in mind, this started, wow. Okay. We really have to pull back on this chart to see this thing started at a peak of $2.5 trillion, right? And this is a big factor in what has propelled the stock market, right? We have seen liquidity move from the safety of overnight Federal Reserve, reverse repos. It's basically like it's an overnight bond, if you will. It's like an overnight bond that the Federal Reserve gives you. They promise to give you back your money at the federal funds rate. So all of that money went into something. It went into stocks. Like, let's be real. It went into Nvidia. It went into risk. This thing is almost out of juice. And when this thing is out of juice, and the Fed is still lowering rates, but where's the money going to come from to pump stocks? So we're also looking here at oil. We're keeping track of oil every week. We're back in this like kind of, do we want to break down? Maybe, probably, kind of. Again, we're looking for a move into this area. This area is flashing red signs at us. So we're not quite there yet, right? But I'm looking for a move into this area. And when that happens, that's when we're like, okay, guys, it's time to batten down the hatches. Like the storm is upon us. Lightning is cracking everywhere. And here's your opportunity, right? That's an opportunity to go short the market if you want to. We're not there yet. But I'm just, we're being very hyper vigilant here. I don't know if you can hear the frenetic tones in my voice, trying to remain vigilant because we know that we're in the window now, right? Like we have entered the window where this thing can happen. We're not quite there. Like the signs haven't said, hey, it's happening. The rain has started. But just know that we're in that window, which is why I'm like trying to, reinforce that to you, that if you're going to try and make some money by shorting the market, you got to be on it every day. You're going to need to check these things. You're going to want to look at this stuff on your own time if you're really trying to short the market, because sometimes these things can unfold very, very quickly. Nothing interesting with dollar index. Maybe we should look at bonds. We always look at bonds. So boring to look at bonds. So the yield curve inversion, uninverted ever so slightly. Bonds still kind of came towards the upside. Some of which ones are those? Like, these are the 2-year, 5-year. Yeah, the 2-year, 5-year came towards the upside. It's looking here like we might be peaking out, right? Bonds have been moving towards the upside. We might be peaking out here. Things might be ready for bonds to move towards the downside a little bit. If that's the case, you know what? The Fed has a meeting this week, November 6th and 7th. This one is odd. They're reporting 6th and 7th, which is a Wednesday and Thursday. They almost always report a Tuesday and a Wednesday. Like all of these meetings here that they've done have been Tuesday, Wednesday. So I don't know why next week will be a Wednesday and Thursday. Oh yeah, good.
That's why they did it for the election. Very
astute, sir. Very astute. Thank you. So they're gonna meet. I guess we'll get to see what they do. They're probably going to lower rates. They're supposed to lower rates by like 0.25% or maybe it's 0.5% in the next 2 meetings. So they've got obviously November, December meetings. So yeah, I wouldn't expect anything major. Maybe they'll lower by 0.25%. I don't know what the market is betting on right now, but they're going to meet next week. That could, what the Fed is doing, could start to become significant for us, but maybe not quite just yet. So I think that's all I got for you guys today. Let me check and make sure that nothing else of consequence happened here that I'm missing. Monero transactions, still 25,000 on Monero transactions. Sir?
Here's something interesting for you. I was just looking at the U.S. national debt clock, $35.95 trillion in U.S. national debt. And I'm certain that the next crisis will cause the Federal Reserve to print like nuts.
The real number go up. The biggest number go up. 35T. Man, I remember when we were bitching about $1 trillion of federal debt. Soon we'll be...
Just about 36.
Soon the word quadrillion will be entering the vernacular, entering the lexicon. Let's see here. Yeah, guys, I think that's all we got. Gold. Maybe we could take a look at gold to silver really quick. Yeah, gold. You know, it's funny. Gold is on a tear and silver is just flat, just sideways. One mistake that I made after the 2017 bull, I did go a little bit into silver and I said, hey, I'm going to buy some silver here. Well, silver did shit. Gold at least mostly maintained its value afterwards. Silver just did nothing. It went down. And I was like, man, okay, now I get it. This is why you go to gold. Yeah, silver sometimes makes better gains. Sometimes it really puts on better performance. But, gold is like, if you want to tether, that's where you go to gold, right? Obviously, tether doesn't give you an interest rate, whereas gold keeps up with inflation. It doesn't give you an interest rate either, but at least it keeps up with inflation. So silver will have a time to shine. I guess pun intended. I hate that.
You can actually get a return on gold paid in gold from places like UPMA. They have gold coin and gold back leases, and you can get like 2% on your gold paid in.
Really?
Mm-hmm.
Well, most bullion vaults like charge you for holding your money there, but these guys give you UPMA. Where are they based out of?
Utah, I believe it is. They're the people who make the gold backs.
Interesting.
Alpine Gold Exchange and UPMA.
Oh, interesting. Okay, let me write that down. my keyboard died on me. I had this other like really nice Logitech MX keys with like the minimum travel distance, etc. And then the keys just like after a few years, the keys just like kept coming unstuck, and I fixed it for a while, but it just it wants to break, and there's nothing I can do about it. So now I'm on this like old HP PS2 connection, like the purple connection that you plug in the back of your computer. I got this one for cubes because you can't USB sometimes into cubes. When you restart your USB cube, you'll lose your USB keyboard. So I have this like old one. So I was like, well, fuck. Okay. So now it's just like, I'm sure you guys can hear that. It's just loud. Anyways, thanks for the tip on UPMA. I'm definitely going to check those guys out because who wouldn't want an interest rate on your gold? That's gains on top of gains.
Exactly. And at 2%, you're actually getting more of the gold supply as time goes on because gold's inflation rate's what, 1.5 roughly average?
Oh, that's slowed down. Okay. I thought it was slightly higher than that.
From what I understand, the World Gold Council says that gold's inflation rate is average 1.5% per year. So if you're making 2, then you're getting a bigger slice of the gold pie over time.
Nice. Yeah, I always thought that was interesting. That gold has this like inflation rate. It has this tail emission. One day we'll mine gold asteroids. We'll send Elon Musk or like his robots or something. If he can get Starship. What is it? Starship? Star something. If he can get his rocket into space and get that orbital refueling proven, then hey, maybe we could actually go get some asteroid gold. That would be such like a dumb. I mean, I guess gold, it's really good because we need it for its conductive properties, but like there's probably a lot better rare metals to mine out of asteroids than gold. Anywho, yeah, I guess I'm gonna hand it back over to you guys. I've got unless you know what, I haven't checked the comments. I'm really bad about that. Okay. Let's make sure we got all the XMR chats. Okay, so receive money. Okay, I don't know which one we left off on. I guess we haven't had any comments. Let me check the YouTube comments, make sure we ain't got anything there. Fairly reasonable investor says, I personally suspect you'll be far better off simply holding physical. Silver is more conductive than gold. Is it really? No, that can't be true. I'm almost certain. Like gold does everything better than silver. Like it holds value better. It's more conductive. It's more thermally conductive. It's prettier. And gosh darn it, people like it.
Yeah, I mean, it's like more dense with atoms, right? Like, doesn't that add to its conductivity? Pretty sure gold is more conductive than silver.
There's someone that asks about some Monero fork, but I'm not going to say that name out loud because I don't want a compliant Monero fork, bro. I am not. I'm not even mentioning your name out loud. It doesn't no. Monero forks are dangerous as fuck, and we knew this when Monero Classic, which is bullshit. Classic. When Monero Classic tried to fork, everyone was like, "No, you could be compromising your privacy. Do not use those coins. It's a trap, right? It's a Fedboy trap." So whatever. Salvium community. Oops, shit! I just said the name. What is that? It's like Salvium divinorum. Yeah, that's like a plant that you can use to get high. People will like buy it in head shops because it's not illegal.
I was going to go and clean my room, but then I got
high.
Salvia, yeah, that's some pretty wild stuff.
I've done it a couple times. I tried to do it like the proper natural way. You know, I just chewed the leaves. I didn't get like the 50x to blow my brain, blow my mind into the 6th dimension or whatever. Like I just like chewed the leaves and did all the meditation. And I was like, oh, okay, this is kind of cool. But it's not like, but I mean, yeah, I mean, it's like a DMT experience if you really go for the 50x stuff. I never really went all in on that, but
silver does conduct. This guy's saying silver does conduct electricity and heat better than gold. It's also more reflective. Gold is better money because it's not used as much in industry.
Man, that's all right. I'm gonna ask. Let's ask Claude Sonnet, which is more conductive, silver or gold. I mean, obviously, silver is more conductive than gold. Clap to a fairly reasonable investor. I think I have a clap here. Anyways, yeah, okay. Crazy. I didn't know that. Well, shit. Because, they always talk about gold being like, we need, they do gold plated. It's like, well, silver plated would be better then.
Yeah.
The next time I see something is gold plated, I'm just going to roll my eyes.
I mean, what makes it? I don't know. We don't need to go down this. We could do a whole show on gold versus silver.
Yeah, we're just bullshitting now.
Yeah. But good to know. All right. I guess we'll keep it moving. Buddy, thank you so much, man. I don't think we have Tony to do the news right now.
Oh.
So I'm gonna see.
That's correct. Sunita said no. Sunita texted me and said no, Tony.
Oh, we lost Tony along the way. I think he needed to come up earlier, but that's okay. I wanted to get Ray up there when we had him, so I didn't want to miss out on that.
Is that why we don't have Tony doing the news? Like, because he's kind of hit and miss on the news. Is it just because he needs to be on earlier?
He needs to be on earlier. Yeah.
Okay. Yeah. I mean, that makes sense then for us to switch places to get the news first.
Yeah. The only thing is, like, if I forget, like today, I wanted to do Ray first because he jumped in because we told him between, the show goes on between 11 and 3, so he jumped on now. So I was like, all right, I got to take advantage of the fact that he's here. But yeah,
the global Southern hospitality demands that the guests go first if that is his schedule.
Yeah, can't make him wait. All right, buddy. But yeah, thank you so much.
Thank you, sir.
I'll see you soon, man.
Thursday. Yeah, 12 days. 12 days and counting.
Yeah.